obviously markets are down 20%. So some stocks are down over 30, 40% from their high water marks of just from January. But in the long run, I would say in the long run, this is more of a buying opportunity than a selling opportunity. That doesn't mean we can't fall another 20% from here too. But I do believe over the long run, the vitality of the United States will persist. And I'm still proud in terms of working with every investor worldwide.
When you just said it doesn't mean that the market can't drop another 20%, a bit of a gasp go through the audience.
I won't like it, but it's not going to, but unlike most, like let's say 08 and 09, you don't see the leverage in the system. You don't see systemic risk. You see this is more geopolitical issues. Look, the fundamental issue that we're all trying to recognize, post-World War II, the United States was a global stabilizer. And I've been now in July will be my 49th year in finance here in New York City. And that's been one of the foundational tenets of I would say the financial community, that we live and work and grow with our economy, and one of the main foundations of the U.S. is that we are a global stabilizer. Obviously, in the last week, we have not been a global stabilizer. And I think that is something that is this going to persist? Are there going to be new global stabilizers in the world? Well, if there are new global stabilizers in the world, and I'm not suggesting there will be, these are questions that must be asked. What is the role of the dollar in that ecosystem? So there's a lot of questions that we need to be asking ourselves. But 80 days ago in Davos, the phrase was American exceptionalism. You heard everywhere. I would say probably every meeting I went to, everyone is focusing on how to do more in the United States. And obviously that's been thrown out right now. Obviously you can look back and say that was just irrational exuberance of too much related to the US. And so that we are seeing a recalibration. 75% of the market value, this was before the last few days, 75% of the market value of the global capital markets was here in the United States. Can there be a reordering of that in the short run? Maybe in the medium term? Sure. And so all of this is the type of questions. Clients have historically underweighted Europe. Okay, so far this year, that's been a bad trade. Should clients be reorienting themselves back into Europe? Should they be reoriented into more of a more broadening of a portfolio? So all these questions are being asked, and I don't have a good answer yet, but I am troubled by that we are not the stabilizer as a country. We are destabilizing, and I think this is what the financial markets are trying to grapple with.